Continuing with the candlestick patterns, and first we will examine the engulfing bullish bearish pattern. It is a two candle reversal pattern, either on top or bottom of a trend. If it's on top, it's called the bearish pattern, and if it's on the bottom, it's a bullish pattern. So we're gonna take a look at an example that I prepared for you today, and actually it's quite a complex example. It will give you an insight in how market functions and how the traders trade. Okay, so let's have a look here. We have a small uptrend here, and on top of that uptrend, we have first a bullish candle, and then a bearish candle that has a full body, which engulfs the full body of the previous candle. So that's the condition. The full body of the second candle in the pattern has to engulf the full body of the first candle in the pattern. Okay, so for me to give you a bit more analysis of what's happening in this move, I will draw now the support and resistance line. So here we have a resistance line. Basically, it is determined by the previous top here. And now we're going to draw a support line, actually a trend line support. And the line, we will connect these three bottoms actually, and we will make it longer. Okay, so now we have some idea of what's going on. Let me explain what's going on the market here now. So after a small uptrend here, we have the bearish engulfing pattern, and after the pattern is created here, after the closure of this candle, the pattern is confirmed. So if you take another resistance here, so here we draw another resistance line which acts as a support line. So it's a support resistance. It's a mini support resistance that was plotted just moments ago, actually, but it works well for our analysis. So what we have here is basically a bounce of this resistance. So this candle broke the resistance, but it couldn't hold. It went back all the way to the resistance line, and in the next candle we have a strong pullback, and the pullback goes all the way to the previous mini support resistance level. So after the completion of the second candle in the pattern, the market professionals, the veteran traders, they are waiting for a position to enter, and we see a bit of a pullback here. So this would actually be a really good position to enter, and we can enter here and put stop loss somewhere above the pull bodies of these candles and just above the resistance line, support resistance line. Okay, and after that we have a downward tendency, but the price is quite volatile. It's going up and down, and basically we can draw another line here. It's also a mini support resistance line. So basically we have a price moving up and down between these two lines, and in the final candle, in this candle, we have a pullback which opens the possibilities for re-entry, and a lot of players on the market probably enter into position here. So the sell-off begins, and this candle breaks both of these resistance lines, and the move goes all the way down to the trend support line. So this would be like a superb place to exit, to take profit. I said before that really good trades can be done around the big support and resistance lines. So this proves my theory, because if we were to exit and maybe went into a buy position here with a relatively tight stop loss, we could catch this move. We could catch this candle. Basically, this candle is almost an engulfing pattern here. But not quite, although it functions basically in the same way. Okay, so this is all with this example, and now we're gonna have a look at another pattern. And to do that, we have to expand this chart because the pattern actually appears here, but not on the weekly, rather on the daily chart. So we're gonna go on the daily chart, and we're gonna have a look at our next pattern, which is called the dark cloud cover or the rising sun pattern. So basically, the dark cloud cover is a bearish pattern, and the rising sun is the bullish pattern. And it's very similar to this pattern that I showed you just moments ago. It's also a two candle reversal pattern, either on top or bottom of a trend. So here, it's not a perfect setup, but it holds up to our expectations. It confirms our theory. So basically, here we are having a downward move. So here we have a downward move, and the first candle of this pattern is bearish, and the second one is bullish. So we expect the second candle full body to open just below the bearish candle, just below the first candle, and the closure has to be above the 50% limit of the. It has to pierce at least 50% of the full body of the first candle of the bearish candle here. So which it does. After this pattern is completed, uh, as I said before, the professionals don't like to take risk. The veteran traders don't like to take much risk. So they are waiting, everybody's waiting to enter into a position. So we have some growth here. The price is rising, but the big players are not have not entered positions. So here, and this is the 50% of the white candle level. And actually, if you have a look in the past, this holds as a resistance support level. So it would be a nice level to put for our trade. Okay, so what's happening here? So basically the price goes up and pulls back down to a position where it's where the buyers are happy to enter. Uh, we would put a tight stop loss just below the 50% level of this white candle. So let's say we would put stop loss here, and for take profit we could use let's say something like this mini support resistance level from the weekly horizontal from the weekly chart. Sorry. So this weekly horizontal line draws the second mini support level that we drew on our previous chart, and basically we see markets going up all the way to that level. Okay, also we could have used these two tops as an exit point. This is an exit point. As an exit point, or we could have used the big resistance line we drew in the weekly chart. The price actually goes all the way up to that weekly resistance, but it's a significant move, and if we were in position, then we might do some money management, and we would like maybe enter a big position here and then close off like 50% maybe on these two tops, maybe 25% here, and here we would have a possible re-entry position. So we would again close something here, maybe even close it here, and here we would look for a total exit point. Okay, so why do we have a pullback? It's because once the pattern is formed, the price may go up a bit from the ideal position which we would use as an entry point, and professional or veteran traders do not enter a position while the candle is being drawn. Only after the completion of the candle they are considering the entry. So once the price goes up, they are not happy with the risk reward ratio. And here, once a pullback happens, a small pullback, now they are happy with this position because they can put a relatively tight stop loss, and with a small risk they are hoping for a really big profit. And here it plays out perfectly. Also, I wanted to show you this example because we now see how the previous higher time frames lines, resistance and support lines, are also crucial on the future and on the smaller time frames. Okay, hope you guys catched it all today. Hope it wasn't too much. Next time we're gonna take a look at some more patterns and we're gonna finish the